Okay, I was going to do this tomorrow, but I couldn't resist this beautiful sunset. I'm going to talk about WeWork, and I think about there's been a lot of stuff in the news, a lot of analytical stuff about just like where it went wrong in terms of like management, in terms of finance. I want to sort of like address it on more of the angle of like the tech workers and the employees involved and the staff, because the staff are really great people. I've got my WeWork shirt. If you watched the previous video, just like, I mentioned that it's not like I'm a huge fan. It's just that I've gotten, I used to work there last year. I mean, not at WeWork, but one of the companies there. And I got a lot of free shirts along the way. And now I'm actually back at WeWork because I really like the environment there. You're surrounded by a lot of, like, the actual premise of the business, or its value proposition, so to speak, in startup speak, is good. It's sound. It's that you're surrounded by, it's a step up from being in a cafe. You're surrounded by a lot of people that are in the same space or doing something similar to what you're doing, but for like the same reasons, to build a business, to build something small, maybe just like scale it up, maybe just like sustain themselves with their own kind of revenue. The actual premise, the actual value proposition of WeWork is very sound and very cool, and that's why I've sort of signed up for another membership, and I'm hoping that I get a tax break for that. I've never actually tried to claim tax on WeWork membership, so who knows how it will go. This month I signed up, I started a membership. I'm in one of the WeWorks in Toronto. Anyway, the people there, the staff there are really amazing. I haven't had a problem with any of them, actually. Every one of them, when you talk to them, they're the kind of people where you're like, if I was working with them as a co-worker, that'll be really easy because they're just really easy to get along with. They're problem solvers. Anyway, really nice people, and they always help you out. They're also hard-working people. And there's nothing wrong with that when you say it like that. Like, okay, this person's a hard-working person. Because I think all millennials fall into that trap, and we've all been bought into that advice that's been championed down and like drilled into our brains since school, through college, in our work careers, that to get ahead you have to work harder than anyone else. The problem is that we all have that advice and we're all overworking because of it. We're all just like, we all think, oh, I just have to work harder. But if everyone else has that same mentality, everyone else is just working their butts off and getting nowhere. And that's kind of what's happening now. And you see that there's not a sadder example that has happened to demonstrate that than the WeWork collapse. I don't know, collapse is a strong word. Like, it's not technically a collapse yet. It's an IPO debacle. Basically, okay, so to sort of backtrack a little bit, because I don't really want to rehash a lot of the stuff that the media has already just like, you can just read on any blog post anywhere, or the Wall Street Journal, or whatever you get your information from. But I'll keep it as a higher level because I'm also interested in just like some, the stock market I've tried, but I don't really delve into that any more than somebody like at the beginner end of coding and who might only know HTML. Like, I am the equivalent of that with the stock market. I only know very, very little, but because I sort of tend to follow a lot of that news, here's what I know about WeWork. In a nutshell so far, is that, okay, so they were valued at around about $40 or $44 billion, I think, when they were aiming to IPO, and IPO is basically another word for going public. And in case anybody doesn't know, just like basically companies work where they go through multiple rounds of private funding to raise extra capital without having to rely solely on revenue. It's better when you also have revenue, but if you want to grow really fast, then raising private rounds is a good way to sort of like to get extra money so you can expand quicker and stronger and sort of like really sort of like, push out the competition without sort of waiting for all your revenue streams to come in. A lot of times when companies are in their infancy, even 5 to 10 years in their lifespan, they still have more expenses than revenue. So that's why they tend to have losses, because their profit gets eaten into with all their expenses for growth. So enter the world of private markets. That's where private funding rounds can come in. Eventually, there's only so many private funding rounds you can do because every round, every previous investor who's invested into the company, their value in the company that they own is diluted a little bit. So nobody, if you're an investor, you kind of, or if you're on the board as well, people that are on the board of a company typically have also led investor rounds or like private investment rounds. They don't want their share diluted, so they're also going to advise don't do like 100 private funding rounds. Maybe do like 3, 4, 5 at the most. Eventually, anyway, whatever the number is, it's usually anywhere between 3 to 5. Whatever the number is, eventually they have to go to the public because it's time, and that was historically where they could raise even more money by making it public. Ever since the 2008 housing market crash, the general public has been a little more skeptical of the stock market, and therefore, for whatever reason, just like that's been one reason maybe why more private funding rounds have occurred. But anyway, so the company reaches the end of the private funding road and they have to go public. Now, they have to prove, this is where they have to come clean. They have to raise all this money and they have to prove to the banks that they legitimately have some big valuation that justifies all their previous private funding rounds, so that they can hold that valuation when they sell to the public. Anyway, the number that WeWork came to, based on their previous private funding rounds, the number that WeWork sort of came to propose that they were valued at was about $40 to $45 billion. I think it was 44, maybe 45. Anyway, but so they had a lot of scrutiny about that. There were a lot of people that would say, are you really, as you'd expect, are you really valued that much? And then digging deeper into the numbers. Eventually there was some kind of there are a lot of fishy business initiatives. I'm not going to go into every detail, but basically a lot of them were propped up by the CEO, Adam Newman. And he rightfully got the brunt of the blame for the bloated valuation. So, long story short, the board had to take action because nobody believed that valuation, so therefore they couldn't go public at that point. They wouldn't have been valued at $44 billion. And since then, they have been devalued again, and now they're only worth about $8 billion. Now I'm not sure how much they've raised. I think it might be 20 billion, but if it's valued less than the total amount that you've raised in the private funding rounds, that's very bad, especially for employees. Now, where employees come into it, and it's not just employees at WeWork, it's every employee in tech industries. Everyone kind of has, unless you're working in an already established company that's been around for 15, 20 years, like a Google or an Apple, your stock options are a little bit more consistent. But for all the other just thousands of tech workers out there, they join these companies to try to sort of get a piece of the pie like that. So say if I come on as the 100th employee for a company and goes through 5 funding rounds, my negotiation might involve a lower salary to get a greater chunk of the pie, a chunk of the equity. So I might negotiate, okay, well, I typically don't negotiate because I have terrible negotiating skills. I've just always been yeah, I'll take that for any kind of sort of salary or equity deal that somebody has thrown at me, which is probably another reason why I'm sort of disgruntled. But anyway, I digress. So yeah, tech workers would essentially just get maybe they get 0.1% of the company, and that's their equity, right? But that's not essentially of the company. This is where it gets complicated. But the simple way to look at it is, this is hypothetical, keep in mind, if you've negotiated that 0.1%, and it's because you might have negotiated because maybe your salary is 20 to 30K less than a salary where you don't have equity, right? So that's where this equity comes in as this extra motivation. It's wow, if you're 0.1%, if your company is worth like $10 billion or something, and 0.1% is, oh my God, all of a sudden I'm a multi-millionaire. That's not necessarily true. Because when your company goes public, the company that you work for, the investors who invested in the private funding rounds, they get paid back first. So their ownership is kind of different to the employee ownership. So it's like there's this investor ownership, and then the employee ownership is here, and you own the 0.1% of this, not this, which is the investor ownership, right? So if WeWork is worth $8 billion and investors have put in $20 billion, there's none of this left for employees. So all those people, it's usually a good incentive if you're working, well, I mean, theoretically it's seen as a good incentive. If you own 0.01% or even 1%, that would be kind of high for an equity stake in like in a startup that's going to become a unicorn or a multi-billion-dollar company. If you own that, that's a good incentive for you to drive yourself into the ground and work 60, 80, 100-hour weeks. Doesn't matter, just burn yourself out, go in there hard. Maybe, you know, do that for 3 or 4 years and then retire as a multimillionaire, right? That's the dream. That's why everyone tries to burn themselves out. But all these WeWorkers, so they all bought into that, working 60 to 80-hour weeks, and now they did it for nothing. Like no pay, there's no overtime. They only get paid for their 40-hour weeks. But they were doing this for years on end, 60 to 80 hours, in the hope that their equity would be worth millions of dollars, and it's not. So that's the really sad thing about WeWork, and it makes me angry. And but it's not just WeWork. This is happening in a lot of places, and this is the reason why I can't stay silent anymore. Why I have to try and help people, or I have to try and get the information out there. I have to try to spread my word, and I'm motivated just to not only start my own business, but to get out of the corporate environment because I don't really fit in there. This whole problem is motivating me not only to sort of get out of the corporate environment to set up my own consultancy, but also to sort of create some kind of, I don't know, you know, one, I need to get the F out, and two, I need to just like warn people and try to sort of like figure out, along with everyone else, the growing number of people that come to this realization that this isn't sustainable, that this is very toxic. And this is probably this is a huge reason that's driving the tech industry into, you know, a toxic culture, is this overworking, and people get snappy at each other, they get angry, they don't really want to work on culture, that sort of thing, and that's why everything is broken. There's plenty of time to get into all of that, but that's kind of sums up the WeWork situation, okay? So, have a good night.